The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 21st. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trade off 185 points, trade out at 20,720. S&P off 22 at 2351. NDX 100 down 55 points. That's about 1% to the downside. NASDAQ Composite off 1 3/10%. She's trading out at 58.25. Russell 2000 down 2% or 28 points. The semis are down 1 9/10%, 19 points to the downside. We've got gold trading up $11. You've got the euro really getting strength in it. That's why one of the reasons why you have the U.S. dollar index pulling back down about 75 cents as we speak right now. Silver's up 12 pennies. That's 0.7% out there. Leading the charge here to the upside, dollar-wise, individual stock-wise, that is Chipotle up $9. Silicon Limited up 6. That's 16%. San Filippo and John B. and Son up 5% or $3. Biogen is up 3. To the downside, Google is one lead. The charge off $15. Priceline not far behind off $13 or 0.7%. You've got SVB Financial Corp down $11, 6%. Amazon down 10. And I'm down one engine. This 12-cylinder Rhodes automobile is blown a half of its cylinders out there. So yeah, you may detect a little less energy in the voice out there, but we will have a really good show no matter what. So first what I want to do is, before I get to the markets here, I had a request that came in from a subscriber who is short Harley Davidson. And he simply asked if we could go take a look at that on multiple time frames. Now, the different time frames that this trader is utilizing, and we're going to add to that. He's utilizing a 5-hour chart as well as the daily chart. So let's go look at the daily chart here for Harley Davidson. HOG is the ticker symbol. And the first thing that we're going to know, and this subscriber, he certainly identified where Harley was headed to, which it has done thus far today. And that was this little breakout session, this little gap. Gaps are your friends. The gap has been filled. Another way of framing that is what Harley Davidson has done is come back to its breakout area. So whether it's a wide-ranging bar, and there's no question that a gap is a wide-ranging bar, or not all gaps are wide-ranging bars, but in this case, in Harley Davidson, it most certainly is, prices come back. Now, the breakout volume that you're taking a look at, Scott, is from March the 15th, 2.7 million shares to the upside. We have traded today to the downside 560,000 shares. We can multiply it times 2 and say, but just straight line math, that's not likely the volume that we're going to get. But we can see that the Harley Davidson, the hog, is pulling back on light volume. Now, let me go ahead and turn these profiles off. These are just the daily profiles. And yes, price has closed below a daily profile. but that also means that it's broken one level of support but fallen to the next level of support. I want to see where the weekly profiles are on this. So we're going to turn that off. We're going to turn this on. This little switch out here. And what you're looking for, Scott, is you're looking for Harley today to close below 60.61. Even if it is on light volume, you'd like to see it close below that, because this should be support. And what you want is a message to you that says, hey, support, it turned out to be not support. Price is back inside the weekly profile. So that's a small positive. Here's what you don't want to see. You don't want to see Harley-Davidson close above 61.68. I'm not necessarily talking about today, tomorrow, the next day. Then it gets back inside the daily box out here. But price has fallen down to support as of 1:11 in the afternoon. Now, that's not the only time. You also were taking a look at what were you? Oh, you were looking at the oscillator and change line on the daily chart out here. So let me put that up here for Hog. And if we take a look at what also has occurred out here is all Harley-Davidson has done is come and tested that level of support. In other words, the oscillator and change red line on my chart is also really helping us to understand what's going on in that price oscillator. If we take the bottom panel of the chart, difference between two exponential moving averages, 19 and 39. And by looking at that line down there below, that the reading is 0.854. I can't tell if it's turned down or not. What I do know is when price below Stevie's red line, it has turned down. What price is that? 60.75. So you have two levels of support that have held thus far. I would say you also want to see it close down below 60.75 today. That doesn't say, hey, the fix is in. It just says that you go take a look at the next gap with regard to where Harley-Davidson would head back to. And that next gap, not much further down, back on the trading session of March the 10th. Again, 2.8 million shares there. So you can see how you're really pulling back with light volume. But you close below the oscillator and change line, you close below this gap here at 60.61. You would then say that the wide open area for this pullback into is going to be the 59.34 to 58.96 level out there. That's on the daily chart. Now, Scott also uses the 5-hour chart for Harley-Davidson. So let's go ahead and put this up on the screen out here. And in the case of the 5-hour chart, the only reason why, Scott, I don't really care much for the 5-hour chart, it's basically the equivalent of the daily chart, right? 5 hours versus 6.5. But that doesn't mean that you shouldn't use it. I like to use the 5-hour chart more for the equity or currency pairs, commodities, futures, something that is trading nearly around the clock out here. Nonetheless, 62.01 is a number you wouldn't want to see it close above. This would suggest that price is pulling back on the equity on just stock charts, individual stock charts. I think, Scott, it wouldn't hurt to just go ahead and add the 30-minute charts to your system out here. And the reason is because at least you've got, with 6.5 hours, you've got 13 sessions that make up the day. Now here, as we take a look at the 30-minute chart here for Harley-Davidson, we can see price was moving higher, doing less relative energy into about the 11 o'clock time frame back on March the 16th. Since then, we've seen price move lower. Just so happens that it formed a hammer candle out here at that same level of support on the daily chart. And you had a seventh wave move down. That's why closing below today's low would be very good for you. So we've got significant support. You want to see that support broken. Steve Rhodes with TFNN. Great.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 188. S&P is down 23. So we took a look at we just came off the 30-minute chart for Harley-Davidson. We mentioned the hammer candle there. We've got two other hammer candles on a 30-minute basis that you and I want to watch for the rest of the afternoon. The first one, and they're really both, they're in the NQ. So we got the NQ 30-minute chart out here, formed a nice hammer at about 12 o'clock. I wanted to simply go on a lunch break. We saw a small little bounce out there, so we want to watch the low of that candle session and see it close below it. We'll go switch over to a 10-minute chart here momentarily. We can see that the NQ, as it made its high earlier this morning, got up to wave number 7, doing it with less relative energy, and then wow, whoosh! What we saw there was that was a horrible effect. What we saw here was a big, huge bearish engulfing candle, just simply engulfing back many, many hours worth of trading that was going on. But, you know, what happened here was one of our patterns that you and I always track. We always pay attention, especially when all these things come together. That's why on Harley-Davidson you want to pay attention to that 7th wave and that hammer candle. A lot of information to be provided to you because in this case it's always nice to know where the buyers and the sellers are lined up, areas of defense, and if they fail, or areas of support. If they fail, they provide us with a ton of information. Well, of course, most of that information is, hey, where's the next step below? Inside the ES Mini, same thing. You can see here, a nice little hammer candle. The lower wick is being tested as we speak. I can do that right now for you, Steve-O. So apparently we're having some problem out here with the system breaking up. So I'm just going to turn the camera off on this piece of it, see if that assists a little bit out here. So there we go. So that's off now, and hopefully that helps a little bit. So it's the hammer candles on the 30-minute chart. Now, if we go take a look at the 10-minute charts out here, just to get a feel for what's happening volume-wise, we'll take a look at the now there's not a hammer candle on the 10-minute chart. We're just looking at the swing point, which took place here between 11:30 and 11:40, and there was volume there of 14.8 million shares. We're coming into it right now with we've just begun. We've just begun, right? We're at 120, and there's already 53 contracts. Did I say shares? My apology. But we've hit it twice with lighter volume. The first time was out here at 1250, 6,700 contracts, and then 6,300 contracts. But I take that back. We're still with light volume. We've got 500 contracts. So at this stage, doesn't seem like we have the volume to really bust through it with any kind of conviction. Doesn't mean it can't break through it, but you're not seeing any type of conviction. In fact, this case here, this 10-minute chart would set up an A to B equals CD to the downside. Nonetheless, you close below the low of a hammer candle. It's pretty simple. If you're long, you're wrong out there. Now, inside the ES Mini, volume-wise, you had 85,000 contracts back at the 11:30, 11:40 time frame. And right now, we're testing with 40,000. So we're testing with a lot of light volume out here. So what should you expect? You should anticipate that there's not enough sellers to bust through this area, at least not just yet as we speak at 1:21 in the afternoon. Bounces, where do they take us to? They take us to the prior swing point in the ES back in the 2356, 2358 type level out here. And back inside the NQ, it takes us up as high as 5382, 5379, somewhere around there. But just so you know, just so that you can anticipate, you just don't have the volume as we speak right now. Not enough people are back from their 3 martini lunch out there, and at least the sellers wise. It's not exactly like we have a lot of buyers, but the so-called buyers have put up their front line. Here is where we know, with that hammer candle on a 30-minute chart out there, here's where we know they came in and said, we want to defend that position. Okay, so in essence, that's what's going on with the markets intraday. If we take a look at, let's say if we fail, I don't know whether they failed today or not. I do believe that they will fail. But if we take a look at where is price headed to, right, that would be a good question to try to add. Or what else is it that we're going to watch? You know, we've got some extraordinarily intelligent, gifted, smart individuals inside the Tiger's Den. And so I want to go back to one of the comments that was made just a few minutes ago, which was, and I want to quote this properly here. Let me see here. Of course, where did that go? I just have to blow this up, and then I'll be able to see it. Should be able to see it. There we go. Crap. There was something that was a crap remark, I believe. Oh well, I don't know why I can't see it, but it was with regard to, I think it was Peter from Park City talking about the VIX index. Why I can't see it, I don't know why. It's probably just in front of me. And with the volatility index being over 10%, and he is absolutely right. Now, this is an end-of-day tool and indicator. You can see that the volatility index is up 10.9%. Odds favor if it closes up anything above 10% today at the end of today's trading session. You're going to see some type of bounce in the futures market. The extent of which you just really have to take a look at patterns and things of that sort. But don't be surprised. When you see the market really tank, and today we're going to have to call it a tank. Of course, the S&P, I don't think it's down 1% just yet. But if you really see the market close poorly, and there's nothing to suggest that it won't, by the way, then all of a sudden everybody gets like this is it, that's it, market's going to crash lower, all those types of things. They may be right, but what you and I have is like a 90% probability that when the volatility index closes above 10% in one-day rate of change out there, what you're looking at is some type of bounce. It can be a bottom out there, so you can't truly rule things out. But nonetheless, in the S&P 500, the volatility index, by the way, if for any reason today it were to close back down below 1184, holy cow, that would really be telling you that you've got just gobs of liquidity out there. That's the 50-day exponential moving average as we speak right now. But what we're going to look for here in the S&P 500, we talked about hammers, or you and I spoke about those a few minutes ago on the 30-minute charts out here. We got a nice little hammer candle that price is trading below inside of the S&P 500. So where is it likely headed to, the S&P 500, that is? Our first target becomes a 2340 level, and you're 2349. So I would anticipate that the market's going to go down there, do it today, break through that hammer candle eventually, and go test that 2340 level. Now, if price were to close below 2340, then that's going to open up the door for the 2280, 2290 level. You know as well as I do that that's been my anticipation all along, that what the S&P 500 will do is pull back into that 2280, 2290 level, and then potentially I do say potentially because we've got to look at the timing on this, form one heck of a, you know what I wanted to say, but one heck of a bottom out there. But at this stage of the game, watch for 2340. That also is a support area inside of the S&P 500. Now, let's go take a look at a couple of requests that came in. First was from Audie, who wanted to take a look at KRE, and we had looked at this for her last week, I believe. So let's go ahead and pull that up. KRE, take a look at it. She indicated that he had a big break of support, and when we took a look at it, what Audie and I had determined was because she was looking for a long-term entry into this, that we weren't going to do anything until price got back to the 53.80, 54.10 level. And we said we want to circle back, especially if it's coming down hard in volume, because if it is, that ain't the bottom. You want to talk about volume? Already 19 million shares as it takes out support. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Adi, back to your trade in KRE. It's broken through all levels of support out here. It's likely headed back into the area from the week that began November 7th, which means it could be anywhere from 43.59, the bottom of that breakout area, to the 49.56 range. What you'll want to do now is really keep two eyes on XLF. because here we have, in essence, the sector, which we know was making a high, doing less relative energy. That's price going up. Those are black diagonal lines on my screen. Gets to a seventh wave move as it makes its high back on March the 3rd. And right now is trading lower. Wave number 4, but also trading right into Stevie's red horizontal line out here. This should be support about 23.69. But with volume coming down so heavy, that is not a buy signal. That is just a level of support. Level of support likely to be broken. The XLF probably coming down and testing the swing point, the hammer candle, from back around the January 19th time frame out there. So just sit tight. You don't want to enter this until the entire sector has said, okay, a bottom is in. Let's go out to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon?
Oh, pretty good. Getting ready for baseball season, right? We open against the Tigers that come to the White Sox on the south side, April 3rd.
Oh, my goodness. Now, who has the better team?
Oh, gosh, I got to believe the Tigers do, but I don't know much about the Tigers, but I know the White Sox are awful.
Oh, okay. Sorry to hear that. I'll pull for you. I'll pull for the White Sox to beat my Tigers.
So I want to ask you about Friday's action in Procter & Gamble, and then I have another question.
Yeah. Go ahead.
What do you make of the action on Procter on Friday? Just Friday.
Just simply that it was running into an already established resistance area, which was at 91.89, and it got up to $92 even Steven. The volume behind the move was nice, 37 million shares. That means that price should get back up there. But if I take a look at it on a weekly chart, let me see what the volume was on a weekly basis. Weekly base, 65 million going into 18 million. So, Procter & Gamble still strong. Still wants to go tag at some point in time the December 22nd, 2014 area. That's the week that began, and that's at around 93.89. It will hit that 93.89 anytime you see this. Go ahead and clear that. Come on, snap up back on my screen. Anytime that it closes above 91.89, that would be the signal that that's where it's headed to. But otherwise, looks like a trading range, and the trading range is between Friday's high and 89.97, I would say.
So Friday's high was 92, and then at the end of the day, what was the volume like where it dropped right down to 91 and closed at 91? How unusual is that to close to reach a high of 92 and then close at 91? But I thought the volume was pretty extraordinary.
You had options. You had options expiration on Friday.
Oh, okay.
We had rebalancing going on Friday, and so I think that that's where a lot of that volume came in. But nonetheless, we're not going to remember that, weeks from now or years from now, when we take a look at the stock chart, we're just going to see volume. We're going to see it pushed up into resistance, did it with some decent volume, and it still continues. It's, today where you do have the Dow and the market's trading lower, Procter & Gamble is trading higher. So I think that all in all, the stock looks pretty good. I know that you're looking for a buy on this, and I don't know where that. I know where it is on this. I just don't know if it's going to get back down there. And the reward risk, it just isn't in it. I don't see it being in it as we speak just yet. But it is. So I think ideally, what you'd like to see is the market really get croaked here, which could last for several weeks, many weeks, and then watch how Procter & Gamble would hold up. Just like opening season, though, and I don't know what. So it's the first week in April when the first game for the White Sox.
The Tigers come to Chicago White Sox opening day, April 3rd.
April 3rd. Okay.
Yeah,
okay.
At Chicago.
Yeah. Originally, I had anticipated that the market would move down into April 7th. Not to be specific or anything, but April 7th, and it's gotten a late start. But the invitation, the RSVP might still be out there for April 7th. So, but one step at a time. The bottom line is Procter & Gamble looks good.
And that buy point would be, if it did pull back, would be, you didn't really mention it.
What you're going to have to really watch is that sign of strength from February 15th. which had 25 million shares. So you've got a wide-ranging bar. There's an actual gap there. Ideally, Robert, this would come and get down to the February 14th area, which is 88.22 and 87.23. I'm not seeing anything in the stock chart that says that that's what it wants to do. I'm just saying that would be the ideal buy point area for you.
Okay, so do you have a minute, or do you have another caller?
I have 2 minutes, 55 seconds.
Okay, so one of the things, and I'm glad you brought up the 2014 high of 93.89. So one of the things I was thinking about is that Procter's actually carving out a top, is topping out here, where it got up to 92 and may not get above 93.89 and would start down. But you don't see that.
I don't. I see Procter & Gamble running to 97.95 or 103.08. And the reasons are the following, Robert. One, the swing point from December 22nd, 2014 has volume of 18 million shares. We're moving into it with much bigger volume than that. So you're moving into a swing point with volume. It says that it can easily blow it away. We have a confirmed A to B equals CD pattern. The week of March 21st, 2016, 28 million shares on a weekly basis, passed with 47 million shares, June 27, 2016. So there's just not anything in the chart today, March, whatever today is, March 21st, that suggests that it wants to do anything other than crash through that area, and move higher. But we have to respect it still is a 100% move when it gets up there, and that doesn't mean that it can't meander and pull back and do things like that. So I just don't know that there's probably better reward risk trades out here. But here's what I would do. If we really have started a decent retracement inside the markets, then you probably do want to be all over this when, in fact, we see the market form that next bottom. Then it probably gives you the best, wherever the Fed pulled back to, gives you the best reward to risk trade.
Yeah, that's perfect. Well, thanks, Steve. That's great analysis.
Hey, well, we'll find out if it's great. It's only great analysis if it works out. Otherwise, it wasn't worth anything. But it was the best we had.
Right. Okay.
All righty. Hey, thanks for calling. You bet. That was Robert in Chicago. We had some requests to go take a look at the GDX out here. So let's start in on that right now, and we'll come back from this break. Well, I'll tell you, we'll start in it like this. Here's what gold is doing. Here's what silver is doing. And here is what your friend and mine, the Japanese yen, we're looking at yen futures right now, crushing through a level of resistance, just as gold is. The level of resistance in gold was 1235.60. Price stays above that. She is headed higher. Probably an A to B equals CD to the upside. Silver is above resistance, headed to 18.15. The yen futures, as long as they can stay above 89.40, all looks good in miners land. So when we come back, we'll go take a look at the GDX and anything else that you'd like. Steve Rhodes with TFNN.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow down 193. Let's go out to New York and speak with Marie. Marie, thanks for calling. Thanks for holding. How are you doing today?
Hello, Steve. How are you?
Very good. Thanks so much for asking. And do you want to look at the NQ, I believe? So tell us what you're doing, how we can help you.
Well, I just have a question. I think it's more like it could be any market, to be fair. I have my patterns and everything, and now that we're breaking the lower point that we hit at 11 o'clock on the NQ, I think maybe my pattern is playing right, which is the target is going to be 52.95-ish on an ABCD. Okay. So now, how can I, let's say I take my profit, hopefully, if it goes there. How do you, because I know that you're bearish, how do you reload in the sense? How do you take profits and then manage to reload? Do you wait for retracement or do you look at... That would
be the best way. So let me ask you this. So when you're taking a look at your patterns, what time frame chart is it that you're using?
I use the 30 minutes or 10 minutes, depending.
Okay, so on a 30-minute basis, here's what I would be watching for. I'd be watching for any of the following patterns to show up, and there's one that's rearing its head as we speak right now, and that is, whenever price. So when the NQ formed its top on a 30-minute chart this morning, price was moving higher, doing with less relative energy, and the way that shows up on my chart with my tool just draws a diagonal line from lower left to upper right. And now those patterns, Marie, they don't mean anything until you see a reversal signal. So in the case of the NQ on a 30-minute basis, we got that when we saw that big wide-ranging bar between 10 and 10:30. In this case here, price is now pushing lower, doing with less relative energy. That's one of the reasons my system drew a line. Now there's several other factors that I put in here, so it's a little bit more than that. But I found that these factors really help us to identify good potential topping and bottom patterns out here. Only if a bullish reversal signal were to form would you want to consider then going ahead and adjusting your stop, taking profits, something along the path that way. I would also then be saying, well, what's the VIX? So there's no action to take right now. However, at any point in time, the NQ could bounce up to 53.85, and there's still nothing wrong with the bearish side of the trade out there. And I'll go take a look at some market profiles for you. But what I would then do on any bounces, I would be looking for the natural areas of resistance for anything to move up into it. Now, I don't know that this pattern is going to work out today. It's only a potential pattern as we speak right now, because I think there's a good enough evidence to suggest that the market finishes towards the low of the session versus having a bounce. I don't know if that's the case or not, and we can't neglect the pattern that you and I just looked at. But this has been a nice sell. And then the other thing you'd have to say to yourself is you have a longer term target out there, so you would want to maybe keep on your core position, I would think, whatever that is, versus having.
Sometimes it's been such a wicked market recently that you just you think that it's okay and it's going your way, and then suddenly you have a bounce of 30 points on that NQ. So I'm just trying to figure out. I don't want to give up all my position, but at the same time, I don't want to be the only one holding the basket there. So I'm trying. So I'm trying to figure out, and I am at 53.86, yes, you said, around that area, to be able to eventually sell back again. But it's just the fact that how do you see something in volume and everything, thinking that we're going to close to the low of the day, or is it your experience, or how does it work?
Yeah, so if just let me do this here. Let me put up the NASDAQ composite. And typically when you get bars like we have now, let me turn off some of these symbols, some of these tools out here, these indicators. So now we have a clean chart. What you're going to notice on down days such as today, if you go back and look at just historically, doesn't happen all the time, but it happens enough to signal to us that we should see the market close at or near the session low. The exact opposite happens on big days to the upside out here. But just simply, you come take a look at November 30th, 2016, you'll see a similar bar, not as wide as today. By the way, today's bar is culminating in a couple of different patterns that suggest that the market should continue lower. But to answer your question, if you come back and you start taking a look at some of these wide-ranging red bars out here, more often than not, you see price go ahead and close towards the bottom of its session out here. And I don't see anything. Yeah, I saw some intraday stuff that was going on, but that wasn't enough to suggest that what you and I are talking about isn't going to happen. And part of the reason is this. If we take a look at the advanced decline oscillator, specifically for the NASDAQ composite, no, it's not the NQ, but this is what we have to go with out here. Yesterday's session, so this advanced decline oscillator, Marie, has been trading below zero for the most part since February 24th, 23rd out here. And pricing has gone slightly higher, but mostly sideways out here. No real wide-ranging bars other than the March 1st session out here, and then came right back on the very next day to trade in essence inside this kind of range out here. But yesterday, price was able to get up above the zero line, and that says that if today was a failure, getting back below zero, it was communicating to you and I that sellers were always in control. Well, to me, if sellers are in control, and we're going to see what they do out here, and we take a look at today's bar, sellers in control means that we're going to see this thing close at or near the session low inside the NASDAQ composite. Inside the NQ, we should see something similar. The other thing is, if I look at the NASDAQ composite, this too was moving higher, doing with less relative energy, and formed a seventh wave move off of the trading session out here from December the 30th. So it took a long time to form a typical topping pattern. This says to me that the NASDAQ composite is targeting the 56.35-ish area. It doesn't mean it's going to hit tomorrow or anything. Yeah. But, I just stepping back and taking a look at, so you're right. This market has not given very much. And so I can absolutely understand the thought process of trying to take your profits when you can. Look, we're short. I'm short. The newsletter is short. but I sent out an update today that said, okay, move those stops to break even, because I can't control what the market is going to do. And and if today doesn't hold, then we have to circle back around to try to figure out, okay, what did we actually miss out here? So everything is set up where I just think the odds favor this closing towards its session lows. I then believe that we're going to see a VIX index greater than 10%. That says you've got to anticipate that the futures market is going to have some type of bounce. But whether you can time that or not, is another question. And what tools would you use to time that? Some of the better tools out there to help you do that would be the TAS market profiles on a 10 or a 30-minute basis. And if you don't have those, it's a real disadvantage at a time like this. In trying to
I realize that. Yeah,
in trying to sell that core position, but I think it's okay to hold it.
Okay. Thank you very much, Steve. I appreciate it. Have a good one.
Oh, my pleasure. That was Marie in New York. This is Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow off 2 1/4, down trading out at 20,681. So Mike had requested, and we're in the last segment here. Let me go back to the GDX for you guys, and for Tom as well, who wrote in. And first, we were taking a look at gold. So we take this, take a look at this chart again here. Now, in the case of gold, it's trading above its resistance zone, 1235.60. So it's going to go up and it's going to go test the swing point high from February 27th. It's probably going to blow it away. Probably. We'll come back to whether it will or or what we have to watch. In the case of silver, it should run up to the 18.15 area. Now, the Japanese yen futures contract is above resistance, but the futures contract is slightly different with regard to its resistance zone versus when we flip over to the currency pair, we're going to go look at support. So here's what's really needed. We need to see the support level of the yen actually get busted. And it's a possibility. We're trading right into it as we speak right now. You will see the profiles form on this screen out here. We've been down here before. Well, you see them if I turn them on. Otherwise, you won't see them, and that's not a good thing. So here are our boxes. They should appear. And this is the level of 111.67. And you really want to see this area, Tom, Mike, you want to see this get broken in order for it to be just simply great and fantastic for your mining trade out here. Otherwise, some jockeying around is likely to happen. So watch the yen, especially watch it overnight to get a feel for what it is doing. The other thing that we're seeing here as we speak right now, 155, is we are seeing the gold priced in euros start to get back inside this little rising trend line. If it can get back inside there, then here's what I can promise you, as much as I can promise you anything. What you're going to then see is you're then going to see traders on European trading desks realize that gold has broken back out, has gotten back inside its trend, and then they're going to want to get in on the action out here. Now, here's the other element that we're watching. If we take a look at gold, the long-term trend line, okay, this is coming back, I say long-term, I'm going back to August 2016. So somewhat long-term trend line is under attack right now. 1247. I mean, it is right on the line. If gold can bust through that, if gold priced in euros can bust through that, if the yen can bust through that support level, it's adios, sayonara, see you later, alligator. Prices will run to the upside out here. So those are the things that you really should be watching for that. Hope that helps each of you out there. We want to go ahead and finish off by taking a look at the semiconductor, the bear position, the 3 times bear position out here. No, that was SOXL. We want SOXS out here. See if we can help Mike out. So you've got a nice movement today, good volume. Behind them, of course, inside these ETFs, it's hard to really gauge stuff here. We really want to go take a look at what's going on in the semiconductor index, the underlying instrument out here. And this confirms a nice top, a price relative strength divergent top out here. This says to me, Mike, that on this pullback, what you're looking for is you're looking for the semis to get down into the 973.27 area. That's the first level of support. Doesn't mean that it'll stop there. But how you really want to be gauging your trade in SOXS is really watching the underlying instrument out there. And then it would also be good to look at the top 10 holdings inside of the semis to see what they are doing out here. Market profiles, hey, SOXS, it's 803 is the level. But do I think that that means a lot? Not necessarily on these triples out there. So, folks, stay tuned. It's Terrific Tuesday. That means we've got your favorite teddy bear in mind, David White. He's coming up next. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. And I'm going back to bed. Have a great Tuesday, and we'll see you on wonderful Wednesday. I'll try to get a few more of those cylinders firing away. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com TigerTV.com under Trading Newsletters.
You're watching Tiger TV.